Welcome to the deep dive. We cut through the clutter of complex info and just give you the essentials. Today, we're taking a close look at Ador Welding Ltd. We've got their latest financial data, their investor presentation, basically our roadmap, our mission to figure out if this, foundational industrial company is maybe quietly gearing up for something big.
Exactly. And for you listening, it's not just about what Ador Welding does. It's about why their performance, their strategy, why it all matters right now. We want you to leave with a really clear sense of where they might be headed and what questions you should be asking.
Okay, let's unpack Ador Welding then. What's their main business?
Well, fundamentally, it's welding. Things like consumables, equipment for welding and cutting, but also industrial repair, maintenance, even automation in welding and cutting. Plus some specialized stuff like flares and process equipment.
Right. And they serve a really broad range of industries. Think automotive, defense, oil and gas, shipbuilding, railways, pretty much anywhere heavy industry happens. So it's like they're the hidden backbone in a lot of major projects. You see a new building, a ship, Ador might be involved behind the scenes. Now, you mentioned their recent performance, FY25. What's the story there? The numbers looked, pretty solid.
They really do. The financials for FY25 paint a picture of a company that's really finding its footing, hitting its stride, you could say.
So looking at those FY25 results, what specific numbers, jump out as key indicators? What story are they telling us?
Well, first off, there's a solid 5% revenue growth over the previous year, FY24. That's a decent start. But what really stands out, I think, is the operating cash flow. It came in at INR 139 crores.
139 crores. And just for context, 1 crore is 10 million Indian rupees. That sounds like a healthy number.
It is. And that cash flow, it's not just a figure on a page. It shows they're generating strong cash right from their main business operations. For you, the listener, this signals that Ador is building financial strength internally. It gives them options reinvesting, cutting debt, without relying too much on outside money.
Okay, strong cash flow. And then there's the working capital management, improved by 18 days. That suggests better efficiency, right?
Absolutely. Getting paid faster, managing inventory better. It all adds up. And maybe the most interesting point here, the company is now net debt-free.
Net debt-free. Wow. What does that actually mean for a company like Ador in this kind of industry?
It's a huge deal, especially in capital-intensive fields. It means their cash on hand basically covers all their debts. It signals real financial discipline, gives them resilience, freedom to act, tells the market they can fund their own growth.
That's quite a position to be in.
And it comes alongside other wins, too. International business grew over 25%. They completed the merger with Ador Fontech, and they turned around their flares and process equipment division. It's quite a combination.
It definitely sounds like they've built some serious momentum. So if we connect these recent wins to, the bigger picture, they must have some ambitious plans ahead.
Oh, absolutely. They're not shy about it. Ador's aiming to cross 2,000 crores in turnover by FY29. That's a significant jump from where they are now.
2,000 crores. That's bold. How do they plan to get there?
Their strategy seems to focus on a couple of key things. Expanding margins, for one, and really pushing into higher-end technology-driven products. Yeah. Growth drivers, it looks like a mix. Inorganic stuff, so maybe M&A, expanding into new countries.
Right, buying growth or moving into new markets.
Exactly. And then core organic growth innovation, developing new products themselves. They've also pinpointed specific sectors for future growth where they see big potential but currently have a smaller share. We're talking renewable energy, defense, infrastructure, shipbuilding.
That makes sense, targeting high-growth areas. But achieving that 2,000 crore target, what are the potential hurdles? It can't be easy.
No. Definitely not. There are always challenges. Economic slowdowns could hurt demand. Competition is always fierce. Integrating acquisitions, if they go that route, has risks. And just the pace of adopting new tech can be tricky. But having diverse industry exposure and focusing on those higher margin tech products, those should help mitigate some risks.
Okay, so beyond the headline numbers and strategy, we also looked at some deeper financial metrics. Things that tell us about their financial health, their integrity. You mentioned something called the M-score. What's that about?
Yeah, the M-score. It's basically a model used to estimate the probability that a company might be, let's say, managing its earnings, manipulating them. For Ador Welding, as of March 2025, the score was minus 3.02.
Minus 3.02. Is that good or bad?
That's good. Very good, actually. Generally, a score below maybe 1.78 suggests a company is a likely non-manipulator. So this score for Ador, It's a strong positive signal. It suggests their financial reporting is likely straightforward and trustworthy. For you, that offers some peace of mind about the quality of their earnings.
That is reassuring. Okay, and we also saw their cash conversion cycle improved quite a bit. It went from 94 days down to 63 days between March 24 and March 25. What's the impact of that?
That's another strong sign of operational efficiency. A lower number is better here. It essentially means they're turning their investments, like inventory and what customers owe them, back into cash much more quickly. This frees up working capital, cash they can then use for, expansion, investment, or returning value to shareholders. It supports those ambitious growth plans we talked about.
Right, it all ties together. And speaking of growth, that international expansion seems like a key part of their strategy now. They're actively moving into the US and Australia.
That's right. It looks like a major strategic push. In the USA, they've already set up some distribution in the upper Midwest and the South. And they're apparently looking for more independent distributors, maybe even a national network. Australia is newer. They just kicked off operations in Victoria in 2025. It shows a clear intent to build a global footprint.
So pulling it all together, what's the key takeaway for our listeners?
Well, I think you're looking at a company with genuinely strong recent results, solid financials, debt-free status, plus a clear, ambitious strategy for the future, mixing organic innovation with potential M&A and geographic reach. And importantly, those underlying financial metrics like the M-score and cash cycle, they look pretty healthy, suggesting good management and integrity.
Okay, a lot to consider there. So here's a final thought for you to chew on. Given Ador Welding's big targets and they're pushed into these high-growth sectors like renewables and defense, especially on a global scale, how might these strategic shifts really reshape their market position and, maybe more importantly, their technological edge over the next few years? Something to think about.